Hello, chart watchers and DecisionPoint faithful. Welcome to this April 19th, 2021 Monday DecisionPoint show. I'm Erin Swenlin, and I am here with my father, Farrell Swenlin, and we want to show you the charts that we think are the important ones to know and see for this week of trading. So we have lots of information to share with you, but before I get into the agenda, I want to welcome my father in. How's everything doing, Dad?
Pretty good.
Pretty good. All right. Excellent. We've got lots to look at, so we will just get right on started and sink into this agenda. Of course, we're going to do our SPY overview and the big four. We'll cover the Silver Cross Index. Carl will be talking a bit more about that. I'm going to cover UNG because we've got a really nice setup going on there. And then we're going to start, though, talking about the stock market inflows and go over a few of Farrell's rules and reminders. Just something to consider when we talk about these stock market inflows. And then, of course, near the end here, I'm going to be doing gold miners and the diamond of the week. So we have a show full of lots to talk about. But I'm going to start with that stock market inflows chart that you sent to me earlier today, Dad. So let's talk about this.
Okay. I got this from the Malden's weekly free newsletter, which I always read. And this I thought was an amazing chart. This shows inflows into stock funds over the last 5 months, and then total in the last 12 years. So in the last 5 months, we've exceeded the last 12 years by this much. This is just unbelievable. Okay.
Completely unprecedented, obviously.
This is just stock funds. I mean, this is like, yeah, this doesn't include individual trading accounts. It doesn't include Bitcoin, for example.
There's a lot of money in the market right now.
Yeah, we're in a bubble, and I think we're pretty close to the end of it, but there's not any way of telling for sure. But I don't know how much more insane it will get because, with the Fed pumping money into the system, it could get a lot worse. And yeah, the worse it gets, the worse the correction's going to be.
And so just a reminder, we talked about the Farrell's 10 rules, but I took some excerpts from it after seeing that chart that really made me think. And here they are. So the first, of course, is that excesses in one direction are going to lead to an opposite excess in the other direction. So we are so overvalued. We are so overbought. We're seeing so much new money. That is an excess. And when it collapses, it's going to be an excess on the downside. There are no new eras. This is something that people have been talking about a lot recently, is that, well, this is just a new time. We've got all these young investors, and that's why we're seeing all this extra money. And so it's just a new time. So it means they're thinking that it's just going to continue forever. But according to Farrell, that's not likely. And then this is the big one, I think that chart is talking about, is that we, the public, buy the most at a top and the least at the bottom. And people are buying an awful lot right now. And that would suggest, as you're saying, that we are getting close to a more, a correction, if nothing else.
Yeah, it's when it finally breaks, it's going to be unbelievable. Husband thinks it's like a 2/3 decline. So
wow, that would be pretty rough.
Right.
Currently, we're looking at our sector scoreboard here, and currently everything is on a buy signal. We're having a lot of these funds are making new all-time highs. It is an unusual time. Now, it's not unusual for us to see buy signals across the board. I know, we've been keeping an eye on sectors for years and years. And there are many times you're going to see a lot of buy signals on these charts. The question is when they start flipping over. And once you start seeing those neutral signals appearing, that's usually a pretty good indication that we might be topping as well. But for now, everything is staying in the buy position. All of the intermediate term trend models or silver cross, all of our sectors are on a silver cross, and all of our sectors are on golden crosses as far as the long-term trend model as well. But I think it's time to go look at a few charts. So I'm going to hand the screen over to you to talk a little bit about what's going on in the market right now.
Okie doke. I'm going to go out of order a little bit.
No problem.
Things are on my mind, and I'd like to talk about them before I forget them. Crypto, notice you mentioned this, that this rally did not make it to the top of this wedge, which is not a good sign. But it didn't make it to that before it started down, and it has broken down from the wedge, but it's not. You can see how the closes are right there, so it's testing it. I can say that at this point because it hasn't closed that significantly below. And there's some thoughts. I think about this crypto thing for a lot, and I heard a couple of comments from guys that I have high regard for, and one is Jim Bianco, and he says crypto is going to survive, and then Barry Ritholtz says the dollar will prevail as a currency. So those comments are not really necessarily in conflict, but the idea that crypto is going to survive got me to thinking. And we've got, if you could look back at the .com bubble and crash, most of the .coms that we had in the first part of 2000 were gone by the bottom in 2002, but a lot of .coms did survive, and of course the .com technology is thriving. So I don't know what crypto is going to do ultimately. Yeah. I don't know what it's going to look like, but I would agree with Jim Bianco that it's probably going to survive. Incidentally, this breakdown here is probably because some countries are banning crypto, so that's giving them a little turbulence there.
Yeah, absolutely. I have a subscriber that I really, he's pretty experienced in all of this. And one of the things he's been talking about, and I have to agree to in some respect, is that when we do finally see a major correction in Bitcoin or in the cryptos, that really could be a signal that that's when the rest of the stock market's going to decide to fall. I don't know what your thoughts are, but it's something to think about. And it is breaking down right now, but certainly there are plenty of levels of support for crypto right now. But when I look at that chart, I would expect it to come down and test, even down to 45,000. So we'll have to see how that goes. But certainly on balance volume is falling off the chart here, and that PMO whipsaw sell signal does not look good for crypto.
I don't know what's ultimately going to be the thing that breaks the market. It's undoubtedly going to be more than one thing, but you might have one catalyst that just starts the dominoes falling over. Mm-hmm. Another comment about crypto is the idea of crypto mining. I've heard other people say, people who are smarter than I am, that they can't figure out how crypto mining makes any sense. they go out and they expend energy that it's enough to power a small city to make one. And they have numbers. I forget what the comparison was, but something like that to come up with one Bitcoin. You know, well, you could come up with a Bitcoin by just making it up, because it's all made up. You know, it's like if I were selling couples of dirt out of my backyard for a penny, but now I decided, okay, if I send it on that cup of dirt on a trip to Catalina and back, and then I can charge $300 for it.
Right.
There's no practical interest that people should have in that. So anyway, one more day that I admit that I know nothing about crypto. And while I'm here, I wanted to cover the Silver Cross Index. We know the Golden Cross Index is the percent of stocks with the 50 above the 200 EMA. The Silver Cross Index, the percent of stocks with the 20 above the 50 EMA. So we're right up there. I'm not sure if it's the highest ever, but it's right up close to the highest ever. And looking down, let's just jump down to these confirming. This shows the percent of stocks above their 20 EMA. They're right up there. See, we've got 93% Silver Crosses and 88% above 20. That's a little lower. Here, 95% stocks above their 50, 95%. So this is all confirming. But now let's look at another index here, and the Nasdaq Composite. Much different picture. We've got it going to this not new highs, but equaling the previous peak, which was a new all-time high. And yet during that period, let's see, that after it corrected off of here, notice we had a higher low and then higher high, so that's an uptrend. But Silver Cross Index, this is gross. It went from, as this price was rising, it was dropping like a rock. And it's at 50% as of today, 50% Silver Crosses, which, I'm sorry, and now moving down here to look at these, are they confirming that? Well, we did get, actually we got at this point, a reverse divergence. We had lower lows here on higher lows here. But as it hits that new high, we're way off. So 50% Silver Crosses, 48% above 20, 47%. This is confirming how miserable the Silver Cross Index is. That's just showing you how we use these in conjunction. We've got them all in one chart, and I set up about 20. This shows you all the indexes and sectors that we've got set up with charts like this. And I worked on them last week and got a little more colorful and more interesting to look at.
Yes, for those who don't know, so if you subscribe to DecisionPoint.com, you will get all of those Silver Cross charts. And as Carl was mentioning, he keeps them up to date. So you can always download or have these in your StockCharts account, but you're not going to see the same kind of annotations and such. So it's a really nice addition to subscription at DecisionPoint.com.
Okay, and that is not me barking in the background.
No.
Okay.
That's the golden.
So let me hit the stocks for today. It was a down day, but not much of one, 0.5%. And we backed off on volume, which was not a, it's not a terrible thing. It's not especially weak like it looks like over here around Christmas. But notice we did hit the moving average on the VIX, and that tends to be a bounce point when you're in a bull market. Notice we made it all the way to the top of this channel, so we are due to move down. So from this view, I'd say we're certainly looking to go lower. The new highs today, I haven't seen it, and it is updated. And they contracted too, which is perfectly legitimate.
Mm-hmm.
Let's look at the climaxes. Okay, no climax activity today.
I'm dying to know what these guys did.
Yeah, backed off as they should have. We're still waiting for these to update, these two here. But the above the 20, as I said, that's pretty high.
Right.
Gold and silver crosses. We looked at these earlier, but just to keep it in the sequence. Everything is for the S&P 500 is right up there high, and they're confirming the new highs. Just so, let me just jump back to, just because it's confirming the new highs doesn't mean that everything's cool. Notice here we've got, if you go back to early 2018, we have all these indicators confirming the new price highs, and then there was a correction. Same again here. Well, no, they weren't confirming here. This is the kind of thing we like to find, and it gives us a warning that this kind of activity is going to happen. Again and again, we've seen that. Right now, everything's confirming. So we're in a situation possibly that we're topping out for corrective action. Okay, let me get back on script. ITVM, they're making new highs today, it looks like. And this hasn't updated.
Mm-hmm.
Okay. Okay, gold today. First looking at the dollar was down over 0.5%, broken down for this support line. Now you would think gold would have done wonderfully today, right?
Mm-hmm.
It was down 0.25%, so it's got more weakness. I mean, it's somewhat positively correlated on today it was with the dollar. It's dollar drops, so does gold. And I really think this is a case where the public is just interested in too many other things that are, sparkling a lot more than gold. Oil, not doing much the last 3 trading days. Did break out here, but not sure what we got going. PMO bottomed and it has crossed up through the signal line. So that's positive. And the Treasury bonds, this is 20-year, broke out. Now it's pulling back to this line of support here.
All right.
Just look at it, the 10-year. It bounced up. This is 10-year yield. It bounced up above the breakdown point I'm not sure what's going on with that, whether this line is no longer relevant and it's going to head lower. I'm guessing it's going to head lower for a little bit. We did Bitcoin. So
yep.
You got it.
All right, let's move on. Since you did mention gold, I think I'll start over on my gold miners, our gold miners chart. It's been a really interesting area right now. I am bullish on it. There's a lot going on this chart, I think, that is healthy. Today we did see a pullback, but after that big shoot that we saw on Thursday, not really a surprise to see the digestion of this move, but it's certainly not showing any real technical breakdown going on. PMO is rising. It's now in positive territory. OBV is rising and confirming. We have the silver cross is showing that we now have almost 57% of gold miners with their 20 over their 50. And then you can see 100% have their price over their 20-day EMA, certainly confirming that. And as far as the price above their 50, and this, of course, these are from Friday. These have not updated yet, but you could already see that we have really good participation, and we're seeing a rise now on that Golden Cross index right down here. So I really like the way gold miners are shaping up. And we did this morning in the free trading room, went over a couple of the gold miners that looked pretty good. But I'll talk about that a little later because my diamond of the week is going to be a gold miner, actually. But before I get to that, I wanted to talk a little bit about natural gas. So last week on the 14th, I had noticed that UNG, it's one that you and I watch a lot. It's just one of those charts that just draws me all the time. And I noticed on April 14th, what was that? Wednesday, Thursday, somewhere in there. I noticed that we had a double bottom here shaping up on UNG. We also had a positive divergence with the OBV on UNG, just waiting for the breakout to confirm what looked like a really good double bottom. However, before I even got into that, I did mention that, we've had similar setups where we've thought UNG was on its way up. Back here, when it came down and came back up here, we thought we had a nice double bottom with the perfect positive divergence like we're looking at now. And of course, it failed. Then it started back up, and then we had a reverse head and shoulders. And so that looked good, and we were getting the breakout, and then it failed. So then we had what could have been a bullish cup and handle, and then that failed. So now we're back looking at a double bottom again. So I did throw caution out there because, UNG doesn't always follow. It's like gold. They don't always follow what they're supposed to do here. And this one is certainly like that. But we do have the crossover buy signal. And again, this was on April 14th. Here's what our chart looks like today. Make sure I have it completely up to date. Of course, that's the wrong one. Go back if you just click on here. There we go. So we got the follow through here. We did get the break above the confirmation line. Today, it's just continued on its really nice run to the upside. Full disclosure, I do own UNG, and I plan on owning it for a little while longer here. The minimum upside target is just below this area of overhead resistance. So I'm looking for a move to at least come up here and test that area of overhead resistance, which from here up to there, that still gives us about a 7.5% upside move that I think is still available here in UNG. Once we get up here to the 200-day EMA and that overhead resistance, I'll certainly another close look at it. We do have that RSI as positive, and everything still seems to be shaping up pretty good for UNG. So while it wasn't my diamond of the week, I certainly see, I do see some opportunities still to get in here. One of the things I do in my trading room is I look at a 5-minute candlestick chart to help with entries and exits. And as far as UNG goes, we got a buy signal that came in an entry point pretty much at about the price that we're at now. Since then, of course, we're seeing the momentum slip, but now it's starting to turn back to the upside. So this one would be interesting to watch for a possible entry. Tomorrow, you might get that you've got rising bottoms, flat tops, so that's an ascending triangle. So really the expectation to me is going to be further upside, but I would recommend taking a look at this 5-minute candlestick chart before you make that entry. And then that leaves me to the diamond of the week. And that is going to be Barrick Gold. So it is a gold miner and it has been beaten down, similar to GDX. But we have the double bottom here. We've got the confirmation. You've got the OBV is rising. We did get a higher high from the previous one here on that breakout. And, you know, I think this one still looks good. We've got a 20-50-day positive crossover in the making here. RSI is positive. It had gotten close to overbought, but having this period of consolidation has pulled it back down out of overbought territory. So I like the look of that. And then we go underneath, we can see that obviously the industry group is starting to outperform the S&P. This is the group to the S&P. This is Barrick Gold to the S&P, and you can see that it is starting to outperform the S&P. But one of the things I really liked was the fact that it is outperforming its industry group and has been. So I think that this might have some opportunity. There's certainly upside potential. Right now, we're kind of sitting right against overhead resistance, though, and that is where we're having trouble at the 200-day EMA. So keep an eye on this one. I think that this has some potential upside. And if I go look over here at the 5-minute chart, you can see that the buy point came in today, right here. You had the PMO crossover, and it took till about here, but that's when the RSI got positive. So this would have been the entry point for the day. And currently we are seeing price pretty much at that point. And now we have that PMO turning back up. So in the short term, probably we'll be able to find an entry pretty quickly on Barrick Gold. But your trading decisions are your own. I am not a registered investment advisor, but these are the kinds of charts that I'm looking at for analysis. Since we have just a minute or two left here, Newmont is looking pretty good as well. In this case, it did manage to get above this overhead resistance. It's pulling back toward this breakout point right here. And you can see there's the bottom above the signal line here for Newmont Mining, positive RSI. So I think this one's looking pretty good as well. It just isn't performing quite as well against the industry group as Barrick Gold is right now. But that one is something that I found as an interesting gold miner as well. Let's see, we have about 1 minute to go. I did get a question in the trading room about solar. Everybody wants to get in on the solar bottom. I was in it, I got rid of it and have never felt better. I suspect we're gonna hold this area of support, but at the same time, you can see that every time we came up, we didn't make it past 20, we came up just barely. So at this point, we have a declining trend, and this level of support, there's a really good chance right now that it's not gonna hold. And you can see that PMO is turned down, it's looking pretty ugly. So I'm not a fan of solar right now. It needs to percolate a little bit more so I can trust it if it's gonna try and make that breakout. But that's all we have for today. I wanna wish everybody happy trading into the week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.